Hello, this is Jordan, and this is your precious metals market update. This video is being recorded on the evening of Monday, May 1st, 2017. And in this video update, I'm going to talk about why I see strong potential for the next low in precious metals occurring in the summer, the June-July timeframe, and why that could be the next good buy opportunity. Starting things off here, we have plotted the daily candle charts along with the 200-day moving averages of various junior indices. JR Gold 1 and JR Gold 2, those are some in-house proprietary indices that we have that we regularly track for premium subscribers. And also you can see GDXJ, and then at the bottom GOEX, which is essentially a GDXJ but for more explorers, and that is a much smaller ETF. But we wanted to throw that in there just along with these other indices to really get a look at how various juniors are performing. And at the right side of each plot, we show the percentage decline it would take for the index to go down and test that December low. Now, that is only about 11 or 12% for GDXJ, but for GOEX, it's 18%, and for the number one index, it's 19%. Over the weekend, our premium update, we surmised that maybe GDXJ was down by 5 or 6% more than it should be. I mean, that's just a guess. That isn't, it's a little subjective, but just because normally GDXJ is fairly close to our Junior Gold 1 index. But as you can see here, those other two, 18, 19%, GDXJ, we'll call it round up to 12%. It's about a 6% difference. So that shows how far juniors are from testing the December lows. Now, the 2 index on top is 27%, and that's a much stronger index that has, I think, 17 or 18 stocks, and we actually own 6 or 7 of those stocks in a model portfolio. So that has held up much better. But I do want to mention that while a lot of individual juniors have held up well, the number 2 index, that could be starting to crack right now. So I wouldn't be surprised if that started to sell off more and the strong stocks started to weaken, especially as you see, gold is starting to crack a little bit. But yeah, let me zoom in and get to GDXJ and GDX. And these things are obviously fairly oversold. I mean, GDXJ a lot more oversold than GDX. But starting with GDXJ, over the last 3, 4, 5 days, it's been trading around 32. It looks like it is threatening, well, I shouldn't say it looks like, but it's threatening to break below 31 to 31.60. Once it goes below 31, once it closes below 31, you can see a quick drop down to 28. So there is a chance in the next couple of days that this plunges down to the December lows. But also, there's also a chance, because it's fairly oversold, because there was a huge outflow last Wednesday, there's also the chance that GDXJ could rally up to 33, maybe even a little bit higher. I see no chance that it's going above 34 in the short term. But if it rallies for a couple days, even 3, 4 days, it holds up well. That to me would set up potentially the next decline, which could come quickly, and then you see a big decline below 31 towards the December lows. GDX closed at 21.69. Its resistance is clear at 22.50 and 23, right where the 50-day moving average is. If that comes up and gets close to tagging the 50-day moving average, that would be a good entry point as far as shorts if you're an aggressive trader. There's also the scenario where it could plunge to 20.4 to 21.1. You see those 2 blue lines there. I think that zone could hold the decline, or GDX could sit in there, trade in there for several days. But ultimately, like GDXJ, I think GDX is headed down to test the December low. I mean, I don't have a crystal ball, but with the way things are setting up now, I would say we'd see that test in June, and I'm looking for the next low and buy opportunity sometime in June, maybe even early July. And just so you know, GDX is about 14 or 15% down to the December low. Now let's look at gold, because the gold chart looks really strong, and it's very encouraging that gold got all the way up to 1290. If gold failed at, I mean, if this rally failed at 1220 or even 1250, I would be a lot more concerned about a big decline. But that being said, uh, gold looks like it's starting to crack. It closed at 1255, which, I mean, it's still in good shape, but it's below 1260, and I believe below the 200-day moving average now. And look, gold has held up really well compared to the gold stocks and silver. But when you have that setup and the sector is basically trading below the 50-day, 200-day moving average, in other words, this is not some bullish correction. That's just never a good sign for the sector when gold is so much stronger than the other parts, and that is worrisome. And that tells me that gold could get hit a lot more fairly soon. And again, 1255 is where it closed. Based on moving average and a bunch of different things, everything is pointing to 1220 as a key level. Also 1210. If we want to be more generous, we'll say 1200 to 1220. But the two big support levels we have to watch for are 1220, and that's on the weekly side, and then on the monthly chart, 1150. So keep that in mind. Now, circling back to the miners, I think they've already priced in sub 1200 gold. Maybe they're pricing in about 1180 to 1190 gold right now. So, relatively speaking, I'm not that, as far as the next, let's say, 2 months, I'm not especially bearish on the miners compared to gold. The miners, again, they've probably already discounted 1180 or 1190 gold. Now, the French election is coming up, I believe, on the 7th. I mean, these types of moves, they can, if the market, gold could have a good reaction to that. But those types of moves do not last. If that happens, don't get sucked in thinking it's a bullish catalyst. I mean, the charts are clear. Look, the big picture, secular trend is up, and we hit a major bottom in early 2016. But, I mean, aside from that, we're below the 200-day moving averages all over the place in the sector. So, and they're sloping down now in most cases. So the trend right now for the sector is down, and that's not going to change by just the reaction to an election. It would just be a false pop, in my opinion. It's not going to trigger a huge sustainable move to the upside. In my opinion. But again, that's just speculation for now. We can stick to the charts. And that being said, let's get to the next chart. And we always end our videos with this chart. And here you see we have GDX on top, GDXJ at the bottom. These are the weekly bar charts with the 80-week moving averages. And last time we did a video, which I believe was April 14th, right? I could be wrong. That's just a guess. But we were hopeful that at least GDX could rally up and get close to 25 or 26. Now, the miners went up the next day, and that was it. They quickly reversed course. GDX peaked below where we wanted to see it reach. It peaked at the 200-day moving average. It turned down. So the warnings that we were giving, before gold broke out and kind of whipsawed us, those played out. But again, as I said, we clearly got whipsawed because gold went higher than we thought, and that whipsawed us for a week or so. But anyway, so GDX did not come close to reaching the January high or February high, whenever it was. Now it's trading below the 80-week moving average. You can see GDXJ. I mean, that's lost the 80-week moving average. I mean, we already talked about that GDXJ's weakness, I think, in the second slide. And it's possible that the miners could rally for a week, maybe even 2 weeks. I mean, these would be very weak rallies, but when you look at this chart, it's just rather obvious that the probability strongly favors a move down to test support rather than testing resistance again. And again, that next strong support is the December low. So we're looking around 27 for GDXJ and around 18 for GDX. So again, for GDX, that's, I think I said, a 14 or 15% decline. For GDXJ, that is, I think, about the same if I remember correctly. But again, if you look at some of the other junior indices, it's closer to a 18 or 19% potential decline. So keep that in mind. I would not be surprised if GDXJ came down and touched 25, if 25 is the next low and not 27. And again, keep in mind 17 or the high 16s for GDX. I mean, look, the trend is clearly down. There's a lot of technical damage in the sector. And as far as fundamentals, the problem that we have right now is inflation has peaked, commodities are rolling over, so inflation's peaked, it's leveling off, and the Fed, the market is almost priced in one hike, and so the Fed probably going to hike one time after that. And so, in my opinion, gold and silver and the miners, they're really not going to get going and start that breakout move until there's economic weakness and the general stock market starts to get weak and rolls over. And it looks like that's not going to happen in the next couple months. And because if that happens, that would then induce more policy that's favorable to precious metals. I mean, you wouldn't see rate hikes. You would see them on hold, and then eventually you'd see them cut. You'd see a lot of fiscal spending from the government. Anyway, I'm getting away from the technicals, but just that little fundamental picture kind of sets up why I see the trend over the next couple months being bearish. But that being said, look, don't panic here. Recall the 2016 lows and how bombed out the sector was. The industry is much stronger. It's in much better shape. It can definitely withstand a 10% decline in the gold price, maybe even a little bit more than that. And by withstand, I mean they wouldn't even be hurt that badly. Just remember how oversold everything was in January 2016. Remember where valuations were. And so it's not time to panic here if the sector indeed trades lower. Instead, what I'm doing is I have some cash and I'm looking to put that to work in the summer when we get down around those December lows, and I'm looking to buy the best juniors that I can find, the best values. And I think that's going to fare well in the months after the next bottom. You can follow all my work at thedailygold.com. You can also consider my premium newsletter. It's only $149 for 6 months. That's at thedailygold.com/premium. And we focus on market timing and stock selection in the juniors. And look, to make a lot of money in this sector, you have to be in the right companies. It's so important. It's even more important than buying low and selling high per se. We have contacts in the industry. We talk to geologists. I mean, we find out which are the deposits with the real legitimate potential and which companies are moving on legitimate fundamental developments and not hype and false promotion. Our model portfolio is a real brokerage portfolio that everything we buy, we're buying for ourselves. And so check it out. Go to thedailygold.com. We got a lot of free stuff. Check out the premium page. Thank you again so much for listening and watching this video. I really appreciate it. If you have any comments, you can email me, Jordan@thedailygold.com, and I look forward to publishing another video update for you in the next week or two. Thanks.